Hi, welcome to the Market Alert for Wednesday, the 25th of May 2016. So yesterday in the pre-market session, the market was fairly quiet and then eventually started to make its way all the way up 100 points, and then we saw the market move higher from the start of the official session, and then we had a buy signal that produced 20 points, followed by a signal that produced a loss of 16 as the market then went into its quiet time. Sell signal in the evening, which also was a losing trade to begin with, and this is characteristic at the moment of the way the market's actually waiting for this Federal Reserve decision in June. So you'll probably see a bit of this as we go forward. So then we had a buy signal which took out the other loss of, and again, 16 points and then 20 points back to the upside. So a day really where more or less break even because of the way the markets traded, with a winning trade followed by two losing, followed by another winning trade before the close there. As I've said before, as these markets are very unpredictable at the moment because the market doesn't know what the Fed's going to do, they're trying to second guess it, and also I've noticed that they're trying to bring this market back up. If you have a look at the daily chart, they're bringing the market back up in anticipation that the Fed is going to raise interest rates, and I'll show you what the effect of that is after. You can see that through October, when they were waiting for the live December meeting, and then eventually we got the increase in interest rates, and then we saw a drop of 2,000 points, and that's what we're seeing now. We're seeing the market being brought back up in anticipation that there's going to be a major sell-off if the Fed do increase interest rates in their June live meeting. So that's why you're seeing this. Again, notice that the volume is negligible as the market moves higher. This is just prices being marked up. There is no buying moving these markets to the upside. News-wise today, we've got the crude oil inventories out at 3:30. They're forecast to show a draw on the stocks of minus 1.7 million barrels there. So showing demand for crude oil, and the API numbers that came out yesterday showed this as well, and there was a spike in the crude oil price yesterday with this as well. So again, watch out for this one at 3:30 p.m. If the forecasted figure comes out at this level or better, and better in this case is a minus, then you can expect to see the underlying market continue to move to the upside, heading back to that 18,137 figure there. On the implied volatility front, iVolatility have not updated their site again, so I found the site where they're getting their data from, which is the Chicago Board of Options Exchange, and I've found the Dow volatility there. You can see the link at the top of the page there, VXD, and this is the 1 year chart. We can see the big spike in volatility last year as we had the flash crash on August the 24th, and how we've had these other moves through November, and again the 2,000 point drop after the Fed raised rates in December, and then how the markets become quiet, and this now just dipping off to 1448. Not quite the same. I don't know whether they're not taking a medium figure, but nonetheless it still gives us a great picture of what's actually happening, and we can go out further as well if we want to have a look back a bit further there as well. So we have to go with 15.12 at the moment on this, but again we can see it's in the lows, and as long as we've got a benchmark of where the lows are, it doesn't really matter how it's calculated. It's still a very valuable and useful tool. So we can see, because the underlying market was higher yesterday, the implied volatility was lower, which is perfectly normal there. Right, that's it for this morning. I will see you in tomorrow's Market Alert, unless there's something to report during the day. If there are profits in the first trade today, then remember you can stand aside. You don't have to continue to trade. You trouser the money and then leave it. If the first trade's a losing trade, then there's a chance you'll pick back up the profits. But if you get a profit as we're going forward to June to this live meeting in the first part of the session or the first trade, then quit for the remainder, because that's all that's required. And as JP Morgan used to say, never apologize for taking a profit. Right, that's it. I will see you in tomorrow's. Thanks for watching. See you in the next one.